Welcome to Markets Now. I'm Michelle Rook along with Joe Vaclavik with Standard Grain. Grain seeing some pressure today. We're mostly higher over in cattle mixed in the hogs. And Joe, let's start off talking about the grains. It looks like weather is kind of one of the features that might be dampening the grain market today.
Well, the weather forecasts continue to change. Yesterday, Thursday at midday, forecast looked a little bit drier. The corn market rallied late in the day. We've got some weakness today on what looks to me to be a wetter forecast. Really, not so much the next 5 days for the central corn belt, but maybe that like 6 to 10 day period and beyond. The forecasts continue to work with this idea that we're going to have kind of a more normal, wetter July versus a very dry June. So, those forecasts, they can still shift. And if we were to come in Sunday night into Monday with something drastically drier, I do think you'd see the markets react to that.
Yeah, how much are these rains that we've had and those in the forecast really going to help this yield on this crop?
Uh, that's anybody's guess at this point. I will say that the drought monitor or drought conditions improved this week. The percentage of corn areas and also soybean areas experiencing a drought declined this past week for the first time since mid-May. So we have seen some rains. I don't know necessarily that they're like total drought busting events, but they were very helpful. And we haven't seen a big bump in conditions yet. Conditions for corn and soybeans nationally are still the worst since 2012. So we've got a little bit of work to do, and we still need some additional rains.
Yeah, and definitely with 67% of the corn acres in some level of drought, can you hit this high yield mark that USDA put initially, or are we looking at a yield reduction in the WASDE next week?
What's reality and what WASDE does are probably two different things. USDA does not have a tendency or has not had a tendency in recent years to make July yield adjustments. That doesn't mean that they couldn't do it, though. I mean, I think personally, some sort of downward revision would be warranted given the drought monitor, given the drought conditions, given the crop ratings. It's really tough to swallow the idea of a trend line yield in corn at this point. Maybe soybeans, you've got more time and you could make that argument. But you know what? If USDA leaves the numbers unchanged and they work with this trend line stuff for another month, I would see that personally as more USDA following its methodology rather than USDA committing to the idea that we have trend yields on the way.
Yeah, but with 2 million additional acres, what's that going to do to that balance sheet?
The balance sheet could be, I mean, it already looks bearish. It's not going to look bullish in July. Typically, if USDA raises the size of the crop, which they could, because they could leave the yield unchanged and they are most certainly going to work with that higher corn acreage number. What they'll probably do is increase some of the demand numbers, but I don't think no matter how you slice it, it's going to look like a bullish report. It's going to be really tough to do.
Yeah, so is $5 December corn too high with that in mind?
It's tough to say. I mean, if you would have shown me the drought monitor, this drought monitor, and said, Joe, this is the 4th of July drought monitor, and you showed it to me back in March, I'd say there's no way corn's going to be at $5. It'll be at 6 or 7, right? The problem is that demand is very much lackluster. We're competing with a big crop in Brazil. If we had even just normal-ish demand in terms of new crop in particular, exports and the perception that demand was better, we'd be acting much better in terms of price action, I think.
Yeah, and weekly exports kind of bore that out this morning, didn't they?
I've been watching the new crop sales pretty closely, and we actually did see some better prints finally for new crop corn and also new crop soybeans. We're still way behind where we need to be and way behind last year. There's a lot of time. The new crop marketing year doesn't start for till September 1st, but we need to start to see some better business here. And a lot of that, is going to turn into a function of the South American growing season. What does Brazil start to look like in terms of corn and soybean crops? What does Argentina look like? Do they recover from the drought? There's a lot of issues at play here.
And what about soybeans? If USDA doesn't do any yield adjustments in the WASDE on Wednesday, 4 million less acres on the balance sheets, what does that do to ending stocks? Are we down to pipeline supplies then?
It's a function of demand. I mean, the supply side will be friendly. Assume USDA does stick with the trend yield, but they've got to use the new acreage numbers from June 30th. They'll probably cut demand. And some people might argue that maybe they're overstating export demand. I don't know. It's tough to say that they're overstating crush demand given all these new plants that are going up, although margins have declined a little bit. So it's probably going to be a friendly looking deal as it has been for a while.
So, Joe, we couldn't get the November soybeans above $14, even with 4 million less acres. So, are we going to have some weather problem to get up there, or what's it going to take?
You probably need to see the idea that we're going to be below trend in terms of yield realized, or at least realized in the minds of traders, which could happen long before harvest. Some better new crop demand in particular would be helpful. Any sort of hiccup in the South American production situation, which isn't going to happen for a few months, but if that were to happen down the road, it could open the door to drastically higher prices, I think.
Yeah. So wheat market, a little pressure today, but we had the big pop on Wednesday, and then we've kind of trailed off. Is wheat a follower at this point, or is it trading some of its own fundamentals?
I think it's mostly a follower. We had the rally, a few weeks ago on, ideas that the HRW crop was going to be no good, which was odd to me because we had known for a long time that it wasn't going to be good due to drought. There's still headlines about, the Black Sea situation and the nuclear plant and all of that stuff. And I think the trade is just very exhausted and weary of those headlines. The wheat market just doesn't seem to react to that stuff the way that it did, say, a year ago.
And the cattle market, we're seeing a little pop today. Is it just because corn is down? Is that the straight function there or not?
You've always got that feeder cattle corn relationship or inverse relationship, and it seems to really be showing itself this week. I mean, it's feeder cattle have done exactly the opposite of corn, I believe, every day. So that's part of it. Cash cattle have perhaps backed off a little bit. I don't know if there's been enough trade to establish a real strong trend. Maybe you see it here today on Friday, maybe not.
Yeah. Kind of sloppy so far is what we've seen on the light trade, but talk a little bit about the technical action. I mean, we made contract highs in both live cattle and feeder cattle futures this week and then kind of put some reversals in, but do they mean much when you're this tight on supplies or not?
It still looks like a bull market on the chart to me. Those daily or even weekly reversal patterns, they're good about half the time. Don't quote me on that, but it's just like any other indicator. I mean, sometimes they're good, sometimes they're not. Those are still charts. You take a look at them and step back. They start in the lower left, they end in the upper right. I mean, there's still bull trends. I think that's kind of the idea that I'd go with.
Yeah. And hogs, the front months kind of consolidating a bit here today, just like yesterday. So is that market kind of due for a breather after this big rally that we've had?
It could be. We saw the cutouts drop yesterday, and that was the first time you'd seen a significant decline in a little while. I don't know. I think when the cutouts decide to top, maybe they did, maybe they didn't. Maybe that's when your futures complex tops. So see what that thing does, early next week.
Yeah, I've got to think funds have covered pretty much all of that short
Yeah.
position they had, haven't they?
Yeah, got to be pretty close to it.
All right. Thanks so much for joining us, Joe Vaclavik. And that is Markets Now.